All right, those are the top headlines that we are tracking on Midcap radar, and quickly taking a look at the markets, and it is not looking good. We have seen some correction from the start. It started on Friday and has continued since then. Today and right now, actually, the markets are at the day's low. It's a 225-point cut on the Nifty, and across the board, we are seeing a lot of selling. It's only some of these consumption names in the Nifty which are doing well, managing to be in the green as we speak. ITC is up 1%. We have Tata Consumer, Nestle, Britannia, HUL. These are some of the outliers in the Nifty pack which are doing well, but it is really the banking index which has taken it to the chin. So that index is down 1.9% as we speak. But we have a management with us today. Let's get straight to Greenpanel Industries now. The company delivered a strong Q1 performance with debt reduction aiding profit. We have CFO V. Venkatramani who's joining us now to discuss the earnings, fine print and the outlook going forward as well. Mr. Venkatramani, thanks a lot for joining us today. Well, before I speak to you about your business outlook and the strong performance that you actually reported in Q1, I wanted to understand what's happening with the regulatory situation when it comes to anti-dumping duty. There was an anti-dumping duty on import of plain MDF which expired on 30th March. Has there been any update on this one?
Good afternoon. No, there has not been any update. So we have stopped following up with the concerned ministries. And I think, yes, that can be ruled out for now.
The indication there, will you, do you think it will be continued? Any discussions that you've had in the past with the authorities?
No, I don't think it will be continued anymore.
Okay.
So unless some new circumstances arise, I don't think, we'll have anti-dumping duty back.
Okay, it's unlikely to get the anti-dumping duty back on plain MDF, which expired on the 30th of March. And anyway, the Q1 numbers reflect the new reality as well as the new normal. Afternoon, sir. Could you give us a sense of what FY23 is going to look like in terms of consolidated revenues? If you could break that up in terms of MDF as well as plywood. For the individual segments, what's the revenue growth and even the expectation on margins?
Good afternoon. Yeah, I think for the MDF segment, we are targeting a 10% volume growth and a 5% volume growth in the plywood segment. So this should give us a value growth of about 20% compared to FY22. Margins, I think we'll have more or less similar margins as in FY22. So not much of any significant difference. Possibly we could see a small minor improvement in the range of 50 to 100 basis points.
Okay, so 26 to 27% is what you're aiming at in terms of margins in FY23.
I think we did about 27% in FY22. That's consolidated for MDF and plywood. So I think possibly we can improve on that by a small, margin.
So you're saying a 5% volume growth that you expect in plywood and 10% in MDF. So that would mean your consolidated volume growth would just be in, high single digits. This appears to be lower than what you had earlier guided, which was, I think, 12 to 18% volume growth for the year. Have you brought down your volume growth expectations?
Yeah, we have, following the spate of interest rate increases by the US Fed and the Reserve Bank of India, we feel that will have some impact on, real estate purchases and housing loan disbursements in the current year. So we have reduced our volume growth guidance for the current year.
Okay. Thanks for that clarification. So in that case, what is happening, since you're saying you expect lower demand coming in from real estate sector generally because of the rate hike cycle that we are in, what is the outlook on capex and funding? You are planning on expanding capacity at a cost of approximately 600 crore rupees. Do you stick to that plan, and how will you be funding this capex that you have spoken about?
Okay, we will be doing it with a mix of internal accruals and debt. So possibly, 60-65% internal accrual and a 30-35% debt. So that's the funding ratio we would keep. And yes, the cost of the project is likely to be around 600 crores.
For how many years, quarters, cycles do you expect the volume growth to be muted, impacted by the macros?
Yeah, that's the reason why we have reduced our guidance. We had earlier guided for a 15 to 18% volume growth in the MDF segment and a 6 to 8% volume growth in the plywood segment. But considering the recent rate increases by the Reserve Bank, we have reduced our volume guidance.
No, so my question is that for FY23, the volume growth expectations, you've tempered it down. But now this real estate hiking cycle can impact the sentiment of real estate buyers for a period of 3 years perhaps. Do you expect volume growth to be in single digits, mid to high single digits for even FY24 or maybe even FY25? How long do you think this muted demand is going to last?
Yeah, I think it will have a short-term impact possibly for 2 or 3 quarters because it's more of a sentimental issue than any significant commercial issue. So rate increases by the Reserve Bank impact home buyers' sentiments for a couple of quarters and then everything goes back to normal. So I don't think we'll see any significant impact beyond the current financial year.
Okay. So in that case, can you just give us a sense of what the capacity utilization is specifically in the MDF segment? The last capacity utilized was 81%. At peak levels, by when do you expect to reach those peak levels? And what is the revenue expectation as well?
Okay, so our current year capacity utilization is likely to be around 80%. And I think we should reach full capacity utilization in the next financial year.
Okay.
What about receivables, working capital? Do you expect that to come under a little more pressure than before?
Not really. We don't do business, any business which compromises our working capital terms.
Okay.
So we don't expect any impact on the working capital situation.
Mr. Venkatramani, I wanted to ask you about the plywood business, especially the decorative veneers. That's around 12% of your revenues versus earlier 8%. Do you expect this revenue share to go up? Is it a higher margin product for you?
Yeah, it's a slightly higher margin product, but growth comes in very small installments because it's a niche segment. So yes, I think we'll continue to grow in that segment. But again, considering the situation in the real estate, possibly, volume growth will be muted in the current year.
So were you planning for any price hikes in the current year? And is that now off the table, given that real estate
At the moment,
yeah.
no. We are not looking at any price increases in Q2. I think we'll review again at the end of this quarter.
Okay. And your debt, you said in 600 crore rupees, 60% will be via internal accruals, 40% via a debt figure. So 40% would mean around 240 to 250 crore rupees for you. Generally, can you give us a guidance in terms of net debt? You aim to be net debt free by September 2022 itself. Are you on track? And with further capex, do you expect that number to go up?
Okay, we had achieved net debt free status as on 30th June,
okay.
So that's already been done. And regarding net debt situation, I think by the time we complete the capital expenditures, so which should take us approximately 2 years, we should again be back to net debt free.
Okay, sir, we'll leave it at that. Thank you very much for joining in. That's Greenpanel Industries. Q1 was healthy for the companies year-on-year as well as on a quarter-on-quarter basis. But the company perhaps is expecting that the high interest rates will hurt the demand from real estate, which is why they've lowered the volume guidance for the full year.